Is it addictive spending, or do we have ourselves a new bull market? That's what I want to talk about here in this video. Go over some current event data that has come out. And that way we can keep in tune with the markets and what's going on from more of an economic standpoint, as I know many of you are interested in this stuff. I love this stuff. And just from an investing, from a trading standpoint, it's important to keep your pulse on all these things that are going on. Now, what about this addictive spending? What do I mean by that? Well, Micheal Burry, who is very famous for the movie The Big Short, he called the 2008 financial crisis and all of that. So I like to follow him, and the media likes to follow him too, because I mean, you got to give credit where credit's due. He made a great call, but he is now making this argument out here about addictive spending. So you can see in a new article here, it says that basically what's going on right now is addictive spending. Now, right off the get-go, I don't agree with addictive spending. In my mind, and as he described it, addictive spending is pretty much just, you know what, you have a certain standard of living and you want to keep at that standard of living, you want to keep at that standard of living, and you're just going to spend it because, well, you're addicted to it and there's nothing you can really do because, well, I mean, it's addiction. To which I would disagree. Yes, there's a lot of spending going on out there, as you're going to see, but me personally, I don't think it's coming from a place of, well, geez, I gotta have it. I have no self-control. I just need to have it. Now, in times past, sure, there's lots of people, there's lots of lack of self-control out there from a personal finance standpoint. Nobody can refute that. But in this present moment, I really don't think that this is all coming from just people's addiction and people's love of spending money. Because again, the data supports otherwise. So going back here, you can see that U.S. consumer borrowing increased by $40.2 billion in June from the prior month, which I realize not a whole lot of context here until this next part. The second biggest increase ever, second biggest increase in consumer debt. Now, once again, I realize, well, Clay, that might just be the addiction. That's the proof of the addiction, just that many more people spending. And I hear you, I understand that point of view, but we got to still think through this a little bit more, because if that were the case, then you'd have to say, well, why are some of these other things occurring? So going back here, you can see that payment networks like MasterCard have reported a surge in demand. So once again, one of those situations where, oh, wow, and now the credit card companies are saying there's a bunch of demand. But why? Is it addictive spending? Is it because people just want stuff that they don't actually need? And new data just came out also very recently, which suggests otherwise. 36% of US adults tapped their savings to cover stuff they don't really need. No, it didn't say that. To cover living expenses, and that's from a survey. And that's very important, living expenses. Now, again, I understand the argument. Well, Clay, maybe somebody's considering Starbucks and their Netflix account as living expenses. And maybe so. That's possible. But in my mind, no, I don't think living expenses, it's what's actually being counted towards those sorts of things. In my mind, we're talking food, we're talking energy, we're talking utilities, just the basic stuff. We're talking rent payments and things like that, just the basics. We're getting down to the bare necessities here. And those are the sorts of things that people would have to tap into their savings for. And then we have more data, which says that US personal savings rate fell to 5.1% in June from 8.7% in December of 2021. So again, think about it. People are now saving less money. Now, they were saving money before, but now all of a sudden they're saving less and less. Is it because of addicted, they just want to go out there and spend? Or is it because things are just so flat out expensive that they have to, they don't have any other choice. They can't save. They have to go out, and not only can they not save, but as the survey's saying, they have to dip into their savings at 36%. But then we have more, which makes this, and this is the cherry on top, and I talked about this in last week's Monday video, but this is just it carrying through that much more. But then we have the article say, income, however, isn't keeping up. Inflation has generally wiped out the boost in income. So like I said, talked about that extensively last week when you compare nominal and real wages. Real wages are what matters, and because of inflation, they've been going down and down and down. So as I argued in that video, people are just flat out getting pay cuts. So you factor that in with the fact that, well, geez, now people are getting pay cuts, which means that they're not only savings less via that interest or the savings rate going down, but they're also having to tap into their savings, which is where that 36% comes from. Which brings us all the way back to, are we in some sort of new bull market? No, in my mind, absolutely not. Because until people can start to actually make money and until real wages can get some sort of, positive trajectory to it, inflation is going to need to come down. In order for inflation to come down, those interest rates are going to need to keep getting hiked and hiked and hiked. And I realize that right now, the market is bouncing because they think the Fed is going to soften things up and the Fed is going to say, no, we're done. We're not going to raise rates much anymore because, but everything's are not fine. And this is why the Fed keeps saying, hey, things are not okay. Look at inflation. And this is why inflation is a problem because, yeah, you're getting wage increases, but you factor that in those inflation is eroding all the wage increases, which means it's a pay cut, which means people are not only going to start to save less, but they're going to have to reach into their savings account. So in my mind, no, this is not addictive spending, and we're also not in a bull market. We're in a bounce. There's no doubt about that. But when you look at all this underlying dynamics, I don't really see how you could consider this a strong economy, let alone a good, solid bull market rally. Now, there is a bit of a detach between the stock market and everyday America. However, at the same time, things begin to catch up with one another. So in my mind, and I hope I'm wrong, I have retirement accounts. I would love to see them start to grow and grow and grow again. But like I said, you see this sort of data, and in my mind, things are not as good as what they seem to be. So are we in a bull or new bull market? I don't think so. Is it addictive spending? No, I think people are just spending money on what they have to because things are getting so expensive. So let me know your thoughts down below. Hit that like button, leave a simple comment, and also check out the channel. And as if you like what you see, then I'd love to have you as a subscriber. Everybody take care. And like I said, let me know down in the comment section. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.